The man who controls more money than almost anyone on the planet just told investors exactly how the next era of finance will unfold, and crypto sits right at the center of it. This isn't about price predictions. Larry Fink just described the roadmap for how trillions of institutional dollars are going to move, and most people won't understand what they're watching until it's too late. Before we get into his predictions, we have to understand why markets hang on every word Larry Fink says. It's easy to hear CEO and tune out, but that would be a huge mistake. Larry Fink is the chairman and CEO of BlackRock. And calling BlackRock just an asset manager is like calling a blue whale a fish. Sure, it's true, but you're missing the sheer scale of the thing. BlackRock has assets under management that have reached over $12.5 trillion. When BlackRock makes a decision, it doesn't cause ripples. It creates tides that can change the direction of global money flow. What makes his latest crypto comments so shocking is his own personal history with it. For years, Fink was a loud and proud skeptic. Back in 2017, he famously called Bitcoin an index of money laundering. That was the kind of statement from the heart of Wall Street that gave big institutions all the reason they needed to steer clear of crypto. He was the voice of old school finance, and that voice said crypto was a sideshow for criminals. But then, things started to shift. Slowly at first, then all at once. Pushed by nonstop demand from clients and a growing awareness of the technology, Fink's thinking started to evolve. And he did it publicly. He even called his change of heart a glaring public example of a big shift in his views. This wasn't just one guy changing his mind. It was a signal that the fortress of traditional finance was rethinking everything. This journey from skeptic to believer led to BlackRock filing for a spot Bitcoin ETF, a move that broke the dam holding back institutional money. He went from calling Bitcoin a criminal's tool to digital gold and an international asset. So now, when Larry Fink discusses crypto's future, he's not just some bystander. He's the architect building the bridges to that future, the gatekeeper who finally decided to open the gates. And the most dangerous mistake you can make right now is assuming this shift is slow. This leads us to the heart of his new message, the tsunami of capital he sees coming. And that's not just a fancy phrase, it's about the wave of institutional money that's just starting to build. The main driver of this first wave? The very product Fink pushed for, the spot Bitcoin ETF. For years, a Bitcoin ETF was the crypto industry's dream. It was seen as the ultimate key to mainstream acceptance, letting anyone with a brokerage account, from a retiree to a giant pension fund, get into Bitcoin as easily as buying a stock. After the SEC rejected application after application for years, it was BlackRock's that finally broke through, thanks to a unique design meant to ensure market integrity. Fink made sure that if the BlackRock name was on it, it would be safe and sound and protected. The moment it got the green light, the flood started. But here's what almost nobody understands. The ETF wasn't designed to pump Bitcoin. It was designed to normalize it. BlackRock's iShares Bitcoin Trust, or IBIT, didn't just launch, it exploded, becoming one of the fastest growing ETFs in history. Recent data shows the IBIT ETF holds over $70 billion in assets under management. In their first year, spot Bitcoin ETFs have collectively attracted massive net inflows. This isn't just everyday people buying in, this is the first taste of that institutional tsunami. We're talking about major financial advisory firms who are now, for the first time, adding Bitcoin ETFs to the list of things they recommend to clients. We're also talking about sovereign wealth funds, which are giant pools of money countries invest for their future. Fink himself has mentioned that some of these funds are incrementally buying Bitcoin, building long-term positions. What was once an asset you had to painstakingly explain to your financial advisor is now being integrated right alongside stocks and bonds. This brings a whole new level of legitimacy. The debate about whether crypto is a real asset is pretty much over. When BlackRock launches and promotes a product, it becomes part of the establishment. It also brings liquidity. All this institutional buying creates a huge, steady source of demand that helps the market mature and could, over time, smooth out some of the wild price swings crypto is known for. This is the tsunami in action. Not one big scary wave, but a rising tide lifting the entire ecosystem. As big as the Bitcoin ETF is, in Larry Fink's view, it's just the opening act. If tokenization succeeds, Wall Street doesn't just move faster, it becomes programmable. Ownership, settlement, custody, and liquidity collapse into a single layer. And that's why Larry Fink says this is bigger than the internet. So what on earth is tokenization? Put simply, it's creating a digital version, a token, of a real-world asset and putting it on a blockchain. Think about a share of stock, a bond, the deed to a house, or even a piece of fine art. Right now, owning these things is a tangled mess of databases, paper, and middlemen like brokers and lawyers. It's slow and expensive. Tokenization changes all of that. It replaces paperwork with code. This is where finance stops being paperwork and starts behaving like software. This isn't crypto invading Wall Street. This is Wall Street rebuilding itself on crypto rails. By turning an asset into a digital token on a shared, unchangeable ledger, you can trade ownership almost instantly, 24/7, anywhere in the world with very little friction. Imagine being able to buy a tiny piece of an office building in another country, or a fraction of a multi-million-dollar painting, all from a digital wallet. This is the future Fink is describing. He believes this will unlock trillions of dollars currently stuck in assets that are hard to buy and sell quickly. BlackRock is already building its own technology to make this happen, showing they plan to lead this change, not just follow it. The scale of this idea is massive. Fink sees a future where the market for tokenized assets could be worth trillions. He believes that one day, every kind of asset, stocks, bonds, and crypto, will all live in a single digital wallet. This isn't some far-off dream. The change is already happening. BlackRock has already launched its own tokenized money market fund called BITL, which is up and running on the Ethereum blockchain. Fink views the Bitcoin ETF as the perfect first step to get the world used to this new reality. It gets people comfortable with holding a digital asset in a familiar format. The next step is to put traditional assets into that same digital format. He sees a future where young investors who first got into the market with crypto can easily move into tokenized stocks and bonds for their long-term goals. The ETF is the bridge, but tokenization is the shiny new city being built on the other side. If you want to understand how this affects your money before it shows up in headlines, subscribe, because the next phase of this shift hasn't even started yet. So if tokenization is the final destination, what part does Bitcoin play in this new world, according to Fink? For him, it's become something incredibly important, a global, politically neutral store of value. He has repeatedly called Bitcoin a flight to quality and an asset of fear. What he means is that with all the geopolitical chaos and worries about governments printing too much money, people are looking for a safe place to put their wealth. For centuries, that was gold. Now, Fink argues, Bitcoin is joining gold as a way to protect against both financial and political instability. He often explains its power with a simple fact. There will only ever be 21 million Bitcoin. Fink points out that if every millionaire in the world wanted to own just one Bitcoin, it would be impossible. There simply aren't enough to go around. And institutions don't need everyone to understand Bitcoin. They just need access before everyone does. This built-in scarcity, met with the massive institutional demand BlackRock is now bringing, creates a powerful reason for it to hold value. But this new financial engine needs more than just a store of value. It needs efficient tracks to move that value. This is where Fink's vision includes things like stablecoins. He praises them for making transactions smoother and cheaper, the same core ideas behind tokenization. He's very aware that there are trillions of dollars sitting in digital wallets around the world. The growth is stunning, with some projecting a continued rapid adoption of crypto wallets globally. This network effect is key. Every new user and institution that joins makes the whole system stronger and more valuable. Every major financial transition creates winners and assets that get left behind. While Fink is painting a very optimistic picture, it's not a straight, risk-free shot to a tokenized paradise. Moving from a financial system that's a century old to one based on blockchain is full of challenges. Volatility is still a big one. Fink himself warns that Bitcoin is a volatile asset and trying to time the market is a bad idea, advocating for holding it long-term instead. Regulatory uncertainty is another major hurdle. Even with ETF approvals, the rules around the globe are still a messy patchwork. There are ongoing arguments over how to classify different digital assets and how to prevent illegal activities without killing innovation. Then there's the massive technical challenge of moving the world's financial assets onto a new platform. Fink has noted that for tokenization to truly work, the problem of secure digital identity must be solved first. This isn't a simple software update, it's a total overhaul that will likely take years, if not decades. This environment of opportunity and risk naturally leads to a lot of speculation about what might be next. While BlackRock has focused on Bitcoin and Ethereum ETFs so far, the crypto community is buzzing with talk about what the next institutional product could be. A lot of that chatter is centered on a potential spot XRP ETF. With Ripple getting more regulatory clarity and competitors already offering XRP products, people are watching closely. It's important to be clear, BlackRock has made zero official announcements on this. This is purely market speculation, but it shows where the conversation is heading. So what's the big takeaway from all this? The message from the very top of the financial world has never been clearer. Larry Fink, the man managing more money than almost anyone on the planet, has laid out a three-stage vision for the future. First, the institutional tsunami is already here, flowing through Bitcoin ETFs and making the asset class legitimate on a global scale. Second, this is just the beginning of the real revolution, the tokenization of all assets, a shift Fink believes will be bigger than the internet. And third, Bitcoin is solidifying its place as a top-tier flight-to-quality asset, a kind of digital gold for our modern age. And here's the real question no one is asking yet. Who controls the rails when everything is tokenized? This isn't just another market trend. It's a fundamental rewiring of the global financial system, and its most powerful player is leading the charge. The walls between old finance and crypto aren't just falling. They're being intentionally taken down and rebuilt into something new and integrated. Larry Fink has shown his hand. The question is, are you ready for what comes next? What do you think will be the biggest impact of this institutional wave? Drop your thoughts in the comments below. Subscribe if you want to understand this system before it's finished being built and priced in. The game is changing, and we're just getting started. Thanks for watching.